That's it. I think we're live, Justin. Huhn, right? Sorry about that.
Huhn, yep.
Huhn. All right, guys. Look, special guest today, Justin Huhn from the founder of Uranium Insider. I know him from, I've seen him being interviewed or talking with Steve Penny, which I contribute weekly on his newsletter. But a lot of guys in the uranium sector, everybody knows Justin. Yeah, so Justin, man, this is I don't know if you want to tell us, I guess like for because my audience, they're primarily maybe silver and gold aficionados, but I know many sometimes they say, Patrick, can you cover uranium? Because most of them, if you like gold and silver, you're also you want commodities, right, to go up, and uranium, it seems that like to fit in there. So yeah, maybe I could
Yeah,
give you the platform to just like let her rip, man. Tell us what you're all about.
cool, will do. Well, thanks for having me, Patrick. Yeah, there does seem to be a pretty good amount of crossover with gold and silver and uranium. I think that it's safer to say that uranium investors are also into gold and silver rather than vice versa. Gold and silver, obviously, a much, much, much larger market. But certainly there's a lot of gold and silver investors that are at least kind of peripherally aware of uranium, and especially over the past 6 or 8 months since it's been running and getting a lot more attention. Yeah, so I'm essentially a retail investor. I've been into investing for a bit over a decade. Started out doing trend following, momentum trading, swing trading, almost entirely technical trading. The technical trader that kind of took me under his wing was his whole mantra was, I don't want to know anything about the company whatsoever. I don't want to know a single fundamental detail. I want to look at a chart 100% unbiased and trade off of that chart. And so that's what I learned. And I did really well with that for a number of years as I was sort of learning about investing. The Uranium Thesis came to me in 2016, and it was an entirely different type of investing. So that alone intrigued me. And, looking at the charts from a technical perspective, it looked terrible in 2016. There was a short spike kind of just after, like a seasonality spike, just after it came to me. So it kind of grabbed my interest, like, oh, this thing's totally beat up and now it's running. In hindsight, that was kind of a head fake that year and for the next couple of years. But I really liked the idea of continuing to do, technical trading, trend following trading, swing trading in one account, and then also doing this fundamental investing research in a different account, and having these two separate baskets with two entirely different methods was something that I really enjoyed. And uranium was just this very complex sector, this thing that I had never even thought about for 5 seconds prior to that in my life. It's vitally important source of energy globally, and especially here in the United States. That the commodity was totally beat up, bottomed to $18 a pound, and we need $50 to $60 a pound to get kind of the global average cost of production in a balanced market. So it was a contrarian investment, the likes of which I had never really seen. And so I was intrigued, obviously, also by the charts from the previous bull market, which are beautiful and parabolic. So from a speculator standpoint, that's attractive, that type of volatility. I think there's a certain type of investor that's attracted to volatility, and I suppose I'm one of those people. Gold and silver folks usually are as well. So I just started diving in, and over the course of maybe a year and a half or so, I already had a Twitter presence, a very small Twitter presence, just primarily from, seeking community and investing. There's a thriving investing community on Twitter, as you well know. And over the course of maybe a year and a half of doing, at that time, was not a whole lot of uranium research, just enough to kind of grasp the thesis a bit better than most. I felt like I was amongst a very small number of people on Twitter that had a pretty decent grasp of the thesis and the supply demand fundamentals and the outlook for the sector. So started the Uranium Insider Twitter page, started building up a following and a community there. That's been going strong for a number of years. Started doing a free newsletter about 3 years ago, just to kind of express thoughts about the uranium sector in an email rather than in a tweet thread. And over some point, I just had a lot of people on the free list requesting, hey, if you ever wanted to do something paid, I'm in. I want to know what you're buying, etc. I'd love to have more feedback, more in-depth research at my fingertips. So we started that 2 years ago, the Uranium Insider Pro newsletter, and that's really taken off in the past 6 months along with the sector. So really long story short, basically uranium is a growth sector. It's an energy play. It's a commodities play. It is part of a whole basket of commodities that are likely to run in the number of years as we see some sort of reversion, out of growth and into value. It's potentially an inflation trade along with many other commodities, and it's a really unique investment in that it's an unloved sector that's very, very important when it comes to clean energy. And so it's starting to get some love in the ESG category. And you're seeing environmental, kind of the environmental left start to embrace nuclear, which is an absolute sea change. So we have kind of this cyclical commodities out of value or out of growth into value, inflation thing happening here. And then we have this secular trend that's just starting over here, and they're kind of meeting. And I would say we're not at the very bottom. I wouldn't call it a contrarian play any longer, other than there's still, from an investing standpoint, there's still a lot of investment funds that have yet to really recognize the opportunity. So I suppose it's still contrarian, but it's not, you're one of a couple hundred people that are into it. Now, there's a bit more attention just because we've seen some good returns in the past 6 or 8 months.
Wow. Well, man, it's insane because I didn't know you did technical analysis, man. So now I can't baffle you with and do mumbo jumbo on my charts there. You'll call me on it. But yeah, you're so right. It fits because I looked up at the, maybe I could share my screen there, and you could,
Sure.
it's fun now because you have the strong background in fundamentals. Just like, it reminds me, like maybe somebody else said it, but I think it's Eric Sprott. He says, you want to feel alone in the room. And that's probably how you felt from 2016, like the unwind maybe of that, all the way to the blow up in 2020. You were probably alone in the room, right? Quietly doing your thing, accumulating whatever you had to. And then when everybody wanted to come in, the door's super tiny and like, whoa. And that's when everything exploded.
Absolutely. Yeah. Up until I would say March, April of last year, when Cameco closed Cigar Lake and Kazatomprom shut down their operations due to COVID. Up until that point, it really was believe me, this thing looks great, and I think it's a very wise contrarian investment. And it was a matter of sharing fundamental knowledge and kind of convincing people that I really believed this to be a great setup. And now that has completely flip-flopped to where, a lot of people still believe it. Now the questions are, how do we know this is going higher? Did I miss it? Things like that. And it's totally shifted. But yeah, you're absolutely right. There weren't very many people that were super bullish on the sector up until about a year ago.
It's so tough because, man, when you're early, you often doubt yourself unless you build conviction based on your research and you have this belief, this conviction. It's so weird that sometimes belief and conviction, you need it because when nobody wants it, it's hard, right? Like we're social compliant creatures and we want to see other people, hey, that's a good trade. Usually when I had a good business idea and when I had a business idea and other people said, oh, that's good, usually it was a bad idea. I don't know why. And when I did something that nobody thought would work, and that was the best idea of my life, it's so weird.
Right.
I don't know why.
Right.
Human nature but all right. So here I'm on this is your Twitter, and this is what got my attention. So on December 4th, I love it. You still have it pinned since then. It's insane. The Uranium shares had a recognition day, and I said, okay, let's go check it out. And then I went, look, correct me if I'm wrong. I'm going on the Euro Global ETF. So I don't know if that's the best place to get a glimpse of, okay, I put the line already here. So December 4th, and look at that, guys. Look at this insane. Holy Moses. I have to put this on the log chart because there's so much, and look at that base. If I could put a trend line, look at that, man. So right here, this is probably the happiest day of your life after you got married. I don't know. But look at that, man. Nobody wants it. And especially here, the total washout, right?
Yeah.
The false breakdown. It's the end of the world. Even I was scared. My tweets, you look back in March and I was like, oh boy, like this is,
Yeah.
can't see
It
straight here
was.
when you're here.
It was a frightening time for everybody for multiple reasons. I mean, I wasn't sure if they were going to close the markets. It's, you really had to be aggressive and confident to be buying at that time. And obviously anybody that did is pretty happy right now.
And that's why, like, I'm part. So your story at the beginning that you were doing just technical analysis, that's practically me, let's say a few years ago. And I was just doing one chart. That's the chart. It could be called bananas. But then I realized over time that there's this thing called weight of evidence. There's macro. So in the complex, like uranium now, you probably know like what helps macros, like you said, like inflation. So you're going to look at the inflation charts to see how that helps. You're going to look maybe at the ratios, uranium versus the Dow, to see if the capital flows are maybe leaving US equities to go into uranium. But all those things are super important to, at least for the timing, and once you know that you're, look at that, these are long-term moving averages, 50 week or 200 week. I could even put my, did you do a stage analysis in your technical analysis? Like just, here, so here, when you're above a inclining 30-week moving average, that's a stage 2 incline, like from the Stan Weinstein stage analysis. So in a downtrend, hard, and as soon as you start flattening out and you have a horizontal breakout, this is just beautiful, man. And huge volume defined base. So a lot of folks right here, all this buildup, all these people who were bag holders back in 2011, they all sold, all their patience, everything, they're not there. So that's what happens once you break out above, let's say that $13 level. That's why it just vacuumed up. But
yeah, and that period, that slow grind down before March of last year, that was brutal. And now you're looking at the URA chart. So URA at the time had dropped down to only 50% holding in uranium. Right now they're at 70%. I think it's likely they're going to increase that. And what was happening is the outflows from the ETF were just crushing the sector. So every day, I just remember January, February, leading up to March, it was just like, it felt like every day we were watching the stocks just down another 1%, down another 1%, down another 2%, just day over day over day. And meanwhile, the news flow at that time still was quite positive in the sector. It just, there's a section of our newsletter we call the flywheel effect. And we talk a lot about the flow of funds, primarily with the ETFs. And so we've seen, it works both ways. It's a knife that cuts both ways. It's when the funds are flowing out of those ETFs, obviously they're selling their underlying holdings, and it's a killer. And the opposite happens. So we've seen huge volumes come into both URA and URNM. And that's just the flywheel effect in the opposite direction. It's a constant indiscriminate bid into their underlying holdings as the money comes into the ETFs. And it's been one reason why, retail is kind of like, this stuff's overbought, and it just keeps stair stepping up. The volume has been huge.
man, but this, the volume's huge. And I did a chart like, man, maybe you could, okay, hold on. Here's a North Star bad charts, guys. The website where we always get requests for uranium, and there's one I did. I don't know if you recognize. Okay, Kalaska, maybe not that one. There's one I did recently. EUX, UEX, UEX. I don't know. Jovex, I don't even know. But
GoVX, yeah, GoVX and UEX, and GoVX is GXU.
Global Atomic, is that a the mining? Okay, here it is.
It is, yeah. Global Atomic is also a uranium play, uranium and zinc.
But they are. Kevin did a chart for them. They're like everything when there's a violent explosion. Here's that huge breakout you had, and you need time to digest, right? To digest, and look at that. It just broke out again. I'm gonna go check it out. GoVX. But when you said for that URA, you said they're not just holding, they're holding miners and the metal itself.
They hold, so they hold market cap weighted uranium stocks, but they're 70% allocated to uranium. So they hold a couple of other companies. I think they hold a couple of actual like oil and gas companies and like that. So they're not, when the sector was in decline, they were increasingly large shareholders of their underlying holdings. So that's why they had to continue to sell it down and reduce their exposure based on uncomfortably large percentage positions in these companies. And the opposite happened when the sectors turned. They went back to 70%. And the other ETF, like I mentioned, URNM, has had incredible success. They IPO'd January of last year at $3 million, and their AUM right now is pushing 400 million in just a year and a half. And so if you take URA's AUM and multiply by 0.7 based on their holdings, URNM is actually about to lap them in terms of actual exposure to the uranium sector. So it's likely that URA is probably just under pressure from their investors, is going to increase their allocation to uranium, which would be a really good sign.
So the more they increase, so I could see that as a fuel from the 70%, let's say, to high 90s. That's fuel for additional capital flows, right? To go and drive up the.
Absolutely.
When money goes in URA, they're actually buying components. They're buying mining stocks. They're buying explorers. They're injecting money in the whole sector for everybody.
Totally, yeah, and into all of their holdings. And I think their threshold is 50 million US market cap, and they about rebalance twice a year. So that there's another rebalance coming next month, I believe. There's going to be a number of other names added.
Okay, and
so the juniors don't benefit as much, but obviously they benefit from just from having a small market cap and oftentimes a low float. So if the juniors do something fantastic, they don't really need the ETF holdings to really move the stock. But for a lot of the other plays in the sector, this money coming into the ETFs has been a constant bid that's really kept them kind of lofty.
It's kind of explained this ascent. So this is like the monthly chart, 1 year and 3 year moving average. And I always say good things happen when you have a bullish cross and you're above it. And people like saying like you're extended. This right here at the bottom is the distance from the 12-month moving average. So it's incredible because it's been overheating forever and staying away from the 1 year moving average. So but now we're hitting some type of resistance here, congestion block that was defined a few years back. But once that is resolved, I think if it moves sideways and lets that 1 year moving average catch up, you're going to have a nice springboard for what I call like a continuation breakout, or to be able to add. And once it breaks out, I have these things, what I call reverse symmetry moves, where usually the energy in is energy out. So it gives me like a $36 target, maybe in the Q2 of 2022, but it all depends when we break out. Man, yeah, this is just epic.
Nice. I'm glad you like it. Yeah, that really adds to my own conviction, because I know that you know your stuff with technicals.
Well,
yeah, I also like those bullish golden crosses, especially when both moving averages or when the long-term moving average is moving up. It seems like a lot of times when you have a bullish cross, but the longer term moving average is flat or moving down, you don't often get that follow through. But when they're both pointing up and the stock is substantially above both of those, it's obviously a very bullish.
Yeah, well, we see it like every time there's I'll look at just, let's say, the gold chart because it's a longer term. But every time, look how long this is like the equivalent of December 2020 for uranium. It just keeps going up and up, and as long as you don't close below it, Look, you could have a ride. This is a 3-year moving average. Even gold is
Mm.
still, even if it's having a hard time, it's still a, you could be in uranium for years. It's a hold until you close below that 3-year moving average. You could stay a long time in that trade, just
Yeah. Wow.
look at these long periods where you could have just ridden. And like you said, I think like they're cyclical. And if you catch it early, then 3-year moving average is super far. Even the 1 year, it's what's the uranium stock where has the most history, you think, where I could get like the most
I would
data?
say probably Cameco,
True.
CCJ
CCJ,
or
right?
CCO.
Yeah, I've done a few of these. Look at that. Whoa. Okay, this is the holy grail of bull runs.
Yeah.
Jesus, look at that.
Yeah, that was the last bull market. It was
So
really, it was epic.
this was like the wake up run, but this from here to here. Look at that. You could have hold. Let's say you had a buy and hold system, just super simple. Buy on the breakout above 1 year and 3-year moving average, and you sell on the first close. You would have sold here on the first monthly close. You would have made 600% in 40 months.
Not
Huge.
too shabby.
That's huge for a big cap company.
It is, yeah.
And so where are we today? Let's look at that. So it's just waking up. We could be here. We need to let it rest. But eventually when this consolidates, then there's a next move. There's a next, let me check that. Yeah, good things happen, man. I can't believe I'm so happy for you or anybody that was following the Uranium Insider, right? That probably everybody loaded up here. Even chemical exploded before December. It exploded in December. Sorry, you were, yeah. Beautiful base explosion. So you see,
Yeah.
no wonder like people like it's slowing down because it's hitting another congestion area here. Long term.
Resistance and support there. Yeah.
Yeah. So what's going to happen? It's probably going to grind sideways, maybe up, down, and as soon as it busts through, I have my classic reverse symmetry move. Man, I always have the. How do I move this? Oh, there we go. I have my reverse symmetry move right here. It's magic. So whenever this thing, I have a. What's my angle? 108%. Oh no, the other way. Whoa, Patrick, there, something like that. Yeah, so my high targets, it looks destined eventually to go, once it busts above that, to go back to its all-time highs. And
Nice.
that's a $7 billion company.
Yeah.
I can't even imagine the juniors there, just because I remember Kevin, my partner, he has a whole bunch of uranium stocks there, and every day, Patrick, look, up 20%, up 30%. Why'd you have to rub it in, Kevin? I was so mad.
Yeah. Yeah, the sector is so small. It's when the money really starts flowing into it, there's just not enough, there's not enough things to buy. I mean, that's why you've seen the volumes come into the ETFs. The institutions are going out to the ETFs. There's 65 companies you can buy, and only there's a handful of them that are so small that they're not even an option for anybody investing with real money in the sector. So the moves can be pretty violent.
Wow. Man, yeah, it's good to give but of course, like when there's always like attention, and people want to know if they're overbought. Now I think it's just a question of maybe of timing, waiting for maybe the moving average to catch up, but it's catching up fast because at that speed it went up. Right now the moving average, let's say it's at 1372,
Mhm.
and every month is just going to catch up fast and fast. And as soon as there's an occasion, it's probably that you come and touch it, or you come within a few percentage points off that 1-year moving average, it's probably the next big chance there to load up there and ride the second stage.
Yeah, it's experiencing a little bit of a pullback here, and it's really welcomed. I mean, things definitely were getting overbought, and it's especially welcomed if you know the fundamental story behind everything. It's like the setup is just fantastic, across the board. And yeah, we have the news came out just the other day that reaffirming the news that came out a couple of months back, which was that Sprott is going to take over managing Uranium Participation Corporation, which is the one of the two big physical uranium funds. So Sprott's taking them over. That should be solidified in Q3. They're going to have, they're shooting to have a New York Stock Exchange listing and an ATM vehicle. So they're basically, for the first time, essentially ever, we're about to have a massive resource management company managing the largest physical uranium fund with an ATM on the New York Stock Exchange that's going to be able to have a consistent bid in the spot market, forcing short-term delivery of uranium. So there's this looming catalyst for the sector that's by far the most bullish thing that's happened since I've been following the sector. And it's just hanging over our heads a couple of months out in front. And then we have, broad market weakness and, gold and silver weakness, and the spot market stops moving up for a couple of days. And there was a little bit of FUD that came out of China. There's a couple of leaky fuel rods in one of their reactors.
What?
It's not really much of a concern at this point, but it's enough to cause an overbought sector to have a hiccup for a couple of days. But it's really great to feel this bit of a reset here, because the outlook for the coming months and the coming years is really good fundamentally.
So that's like so that's how you conciliate fundamentals, let's say news, with price action. So let's say there's a news coming out. Is your first reaction to look at the chart? Okay, look, the price is pulling back as this type of news, it's happening close to resistance. But I'm pretty sure that China news, if it happened on December 2020, it would have been a blimp, right? Let's say you get that news when uranium's just breaking out.
I think so. And I think a lot of it does have to do with the flow of funds, because that really was the story in December. There wasn't really anything fundamentally that was happening in December besides, there was news that the US was going to be more supportive of nuclear with an incoming Biden administration, which was positive, but that wasn't what happened. What happened was uranium was mentioned with very strong conviction in the Bear Traps report from Larry McDonald. And that was on December 3rd. And then, or maybe it was December 4th. It was a Friday. I think it was December 4th. That was that morning. And then, highlighting, and his audience for the Bear Traps report is largely an institutional audience, professionals. And he was saying, okay, this is a strong seasonal trade, but we also have this potential ESG play. You get exposure to energy. It's a commodities play. This thing is unloved. It's undervalued. And we saw big volumes come in that morning. And then the story was picked up by Zero Hedge, after hours. So people got to chew on it over the weekend. And we just saw follow through week after week after that. So with just really big volumes coming into the large caps, some of the mid caps, and especially the ETFs. And it led up a little bit. I think it was in February, but it's been really, really consistent. Big money coming in. Yeah.
Okay, look, when I put it, I like put it, let's say on the line chart. And when you put on the line chart, and while I do that, is it like gold sector where uranium, the metal has to break out, and then once it breaks out, the miners, they follow suit, and on pullbacks, it's the miners that because the uranium spot price, it hasn't moved much, I think, right? Like, I don't know.
It hasn't moved that much. And typically, yes, I would say there's typically a strong correlation between the uranium spot price and the miners. But this move in December and until the Sprott news really is what's moved the spot market a bit. But from December, let's say, to February, there was almost no price action in the spot market. In fact, it was falling or at least chopping sideways. So those moves, that's how we knew something was different in December, because the spot price really had not done anything. And there wasn't any real fundamental story that would bring that much attention to the sector so quickly. So we knew it was something else. And what it was a institutional story. Institutions were becoming, savvy of the thesis and piling money into the sector. But yes, typically the spot market is what moves. And a lot of times, like you said, you'll see the miners move before the spot on the way up and vice versa. So since February, we've had a bunch of spot market purchases from non-producing uranium companies. A bunch of the non-producing miners raised money to buy spot. and that started to move it. And then the Sprott announcement started to move it. So now we're up to about 32.50 a pound, roughly. And so what are we showing there? Yeah, about 32.50.
Yeah, yes, the man, it's an every time you bounce on that 3-year moving average, it's time to load up if it holds. And this was in February. You had your last chance to load up, and it's showing a lot of strength. It's impressive because look at that. I call this a bullish transition zone. So as soon as we're above, I did a lot of lines here, but as soon as we're above this horizontal breakout line, it's full time.
Nice.
So above 34.
Yeah. And that move to 34 in 2020, that was almost entirely driven by Cameco purchasing. And what happened was there was a disjunct between the 3 primary delivery locations, which are the conversion facilities. So what you had Comurex and Comradine, they stayed, I believe, right around $30 a pound. They didn't really move, and we had a $3+ bifurcation with Cameco delivery. So it wasn't really a move of, let's call it, it wasn't a sector-wide fundamental move for the price of uranium. And what we're having now is very little bifurcation in the delivery locations. It's moving up across all delivery locations, which is a much healthier sign.
Geez, how do I didn't like, I thought just the price of spot moved because of I'm so used to like the comics, because people who it's like the commercials, right? Some people, they hedge their positions, like you said, there's some aren't producing, so they want exposure to the metal price. And geez, what was that like about Sprott? You were saying Sprott now, is it Eric Sprott, or is like Sprott company now, which is going to be dealing in the
Sprott is going to be, so Sprott is taking over management of Uranium Participation Corporation, and it's the name change is going to be the Sprott Physical Uranium Trust, just like they have the Physical Silver, Gold, Platinum, Palladium Trust.
And when is that coming online?
That's in Q3.
Wow, so that's going to be something big, right? So let's say pension funds or people that have access now to through that fund. And
highly liquid, New York Stock Exchange listed, that money flows into that. It very directly equals purchasing in the spot market. So what we think has been happening is that there likely has been, let's say, kind of backdoor whispers about this happening for a long time in the sector. When I say a long time, I mean months. So I think what's been happening is institutions have been loading into the equities with an expectation that via either Sprott or some other vehicle would be purchasing physical pounds. So the step one is to position in the equities. And once the position is sufficient and the spot market is sufficiently thin, then money that flows into the spot market via Sprott or via hedge funds actually purchasing physical uranium, which they have already started to do. That's another thing that we just found out. We've been speculating on that for months, even back in December, as was Larry McDonald, but confirmed just a couple of weeks ago, the hedge funds have now been buying physical uranium. So they're going to position, and then they're going to squeeze the market. And that squeeze is started to happen. And boy, is it really going to happen when Sprott moves in.
It's do you guys have like conspiracy theories like we have in the gold and sector where comics they're shorting silver and gold? Is that like do you guys do we have that in uranium?
Not really. It's it's interesting because there's not really like a futures paper trading market in uranium. There's physical uranium traders that are playing an arbitrage play on interest rates and delivery times and small moves in the market, things like that. But there isn't a whole lot of price manipulation. I mean, I guess there's some, you have the, I guess in one way you have the uranium market and what's the word I'm going for? There's a couple of uranium market analysts that serve the utilities, UXC and Trade Tech. And UXC is by far the largest, and they've been not bearish on uranium, but kind of tepid in their language for years. And we kind of believe that they've sort of potentially used that language to keep the market sort of chill and to keep the utilities from panic buying into the market. But as far as actually purchasing and selling to influence the price, it doesn't seem like that happens en masse. And one of the reasons is because the actual fuel cost for nuclear reactors is relatively small. You have massive sunk costs in the building of a reactor, and the lifespan of these things is 40, 60, 80 years and potentially longer. And so the actual cost of fuel as a percentage of operating costs is relatively low. So as the price goes up, it's kind of like, well, I guess it's time to buy again. Our inventories are down. The large utilities are starting to sign long-term contracts. And there's kind of traditionally, there has been somewhat of a herd mentality for utilities. So, but it's sort of it's new and it's not new. So the previous bull market, hedge funds were really what moved the price to that $134 peak. That was the big driver of that crazy spike.
Uranium was at a 134?
Yeah.
Do I have it on this chart? Jesus. Yeah, I see. I have the spike here. Holy Moses.
Yeah. And, there were some utilities that did purchase contracts of uranium north of $100. And, those guys are still around and they, will never live it down, and they're not about to do it again. So we think that there's going to be substantial term market contracting, as the price goes from the 30s into the 40s, 50s, 60s. But the spot market's going to be driven by these financial players. So we really have no idea what's going to happen to that price. And it's highly likely that we will see another kind of spike like the last market in the spot price.
Yeah. For whatever reason that happen, these spikes, it's human emotions. Like the market eventually, it rarely stays at equilibrium for a long time. It's always like seeking, it gets squeezed and it jumps out to like, okay, we're going this direction. We don't know how much. And then it overshoots and then people take profits and then it stabilizes and until like something changes. But right. Yeah, it's looking good. Look, I have another reverse symmetry move. So as soon as we bust above 34, we should be heading to 40 in maybe in Q1 or 2 of 2022 there. This could scale sideways, like depending when we break out there.
Mm-hmm.
But look, it's so simple. Higher lows. Look at that. Higher lows, higher lows. This is all volatility. So all these guys are leverage guys, traders, swing traders, have fun. But this will destroy like the market. Look at that. That's an uptrend. Clear uptrend.
Yeah.
Until that trend line's broken.
Yeah.
Hold on to your uranium. And uranium, is that like radioactive or it's only when they activate it in the energy, like in the reactors there? Could I hold a uranium rock in my hand?
You could. Yeah. It's mildly radioactive.
Mildly.
Not dangerously radioactive. Yeah. Like the yellow cake, the processed mined uranium out of the ground. It is radioactive, okay, but not severely so. But it's converted from that point into uranium hexafluoride. And then when it's enriched, it goes from 0.7% U-235 to 3 to 5% U-235, which is the fissile isotope. So the enrichment process is really what brings up that radioactivity. But yeah, I mean, you're not going to be able to bring it up on TradingView there, but the other aspects of the fuel cycle are moving up similarly. SWU, which is the cost of enrichment, stands for separative work unit. That's been moving up since 2018, since the summer of 2018, and in a pretty consistent, similar fashion. And then conversion is just off of an all-time high. But you're also seeing uranium hexafluoride, UF6, which is converted uranium, moving up as well. So all of the underlying elements of the fuel cycle are in an uptrend. And
that's how you call it? You call it the fuel cycle?
Yeah. Going from the mined uranium to converted uranium to enriched uranium to fabricated fuel and then to delivery to the reactors. That whole process takes 18 to 24 months, depending on how it's mined.
Jesus, man, you know so much. It shows that you've been in this for years, man.
Yeah, I know.
It took me years for the gold market. Like when I saw it was breaking out against Canadian dollars, because I'm in Canada in 2018, I saw something big's happening. And then I started like looking around gold silver ratio and all that stuff. But it took years. Even today, I still don't know anything there about the fundamentals. So
yeah, it's a complex, I think that in some ways it's much more complex than than gold in terms of the actual sector and the utility of the metal. But as far as the market, I think the precious metals market is far, far more complex. I think that actually, yeah, I think so, because you have so much more manipulation, paper trading and futures and all of that. And with this, it's like getting the supply demand fundamentals and understanding the fuel cycle and kind of the whole underlying mechanism of nuclear energy, which is the basis for the investment thesis in uranium. Getting that right, I think, is more complex. But once that is right, then it's just like, okay, well, we've got 65 stocks to choose from. And, it's a small sector. And then we just look at the money flow and all of that. So it's a little bit simpler. We don't really have to worry about manipulation and interest rates and things like that quite as much. It's just more of a straightforward trade, I guess, once the difficult to understand fundamentals are understood.
All right, let's say the hard question I could ask is, which one or would make you change like your mind? Would it be like a price action breakdown, but the fundamentals still there, or fundamentals are broken, but there's no price action breakdown? Like how do you deal with that?
I think a fundamental breakdown, gosh, that's a really hard question because right now, I mean, really what's moved this market, I mean, the fundamentals are off the charts positive right now. It's really crazy. But December, January, even with an underlying positive fundamentals, it wasn't fundamental news or the commodity price. It was moving. It was money. It was money flow. And so I think, ultimately the charts don't lie. So if there's a fundamental breakdown and the charts are where they are, and it would want to make me look into it further. But at the same time, I think that the fundamentals at the beginning of the bear market, there were a few people that were very honest in the uranium sector. One of those was Bill Sheriff, who's the CEO of Encore Energy. He came out to his shareholders and said, guys, this isn't looking good for a long time. This is going to take 5+ years to turn around. That was 2012 after Fukushima. He came straight up to his shareholders and was like, this is not looking good for a long time. Then we had a lot of, practically every other CEO in the space saying the price of the commodity is less than the cost of production. It has to turn around. And that went on for 8 more years. So really, I mean, ultimately this is and has been a fundamental speculation for me. And so I think it's fundamentals first, but at the same time, the charts are sort of showing something that's happening that affects the fundamentals. Yeah. So even though we're looking at price action, I would argue that price action is reflecting a fundamental piece of news, which is institutions have found uranium. That's something that supports the fundamentals, even though it's really moving the chart kind of as a separate thing. I don't know if I even answered your question.
No, you did.
I had to pick one or the other. Yeah.
I always ask myself that question, like, why am I not doing fundamentals? And is it the chicken and the egg type thing there? And then my brain explodes and then I just faint. But right. We see in the volume though, in those charts, that increasing volume, that is something happening. It's people increasing volume on prices going up. That's it's people bidding up, like you said there. So there is definitely a money flow. Oh man, it's so tough because I'm trying to stay as a chartist because I'm always afraid that I don't want to get stuck. Let's say gold totally breaks down and they don't go back to new highs, but guys are printing money like crazy. It has to go up. A lot of people were probably saying that in 2013 for gold and silver also. So I don't want to be trapped with if you want to make money, it's price action, but fundamentals and the price action working in your favor, that's a powerful combination, I think.
I totally agree. Yeah. What was I just going to say? I do believe in uranium, though, that if there's a big fundamental shift to the negative, that the prices will respond to that, to the downside. I do think. I mean, we just saw a couple of days ago it was a CNN broke the story about the gas buildup at the power plant in China, and the stock sold off 5 to 10% on that news, and they recovered most of that by the end of the day, or some of it by the end of the day, actually. But it was the heavy volume. It was actually, when was that? Was that Friday? It was a record volume day for URA, for the existence of that ETF. And so you had panicking retail selling, and in my opinion, institutions buying, because they actually added shares that day.
Yeah.
So, but I do think, something that actually does, because that doesn't change the fundamental story at all, in my opinion, other than maybe a little negative hit to sentiment for a short period of time. But, if we have a fundamental story of like, France is going to shut down all of their reactors, or China is substantially downsizing their plans for their build outs, or something like that, we're going to see the sector react to that, in my opinion. Yeah. So you might not be a choice between those two.
France, they do. I lived in France for many years, and I remember going on their highways, and I'd see these big, like the Homer Simpson tubes there going up.
Cooling towers, yeah.
They have that, because in Canada we don't have any. And man, I was like scared. Like, said, man, it's so close to the highway, but it's like it's
yeah,
like Chernobyl. Yeah, exactly. Chernobyl scared
Simpsons, I think, actually did a lot to affect general public sentiment of nuclear. I think it did, with the fish in the river with 3 eyeballs, and
he had his little chicken there, like just pressing on the button every 20 minutes. Yeah. Remember that? Oh boy.
Yeah, so good.
Man, yeah. It was a pleasure, Justin, man, talking to you for the first time there. Like, you're like an internet celebrity in uranium, and you're not a robot. You're an actual person.
Yeah. It's cool. Yeah, it's great talking with you as well. I appreciate you bringing up those charts too. I know you definitely have a real knack with technical analysis, and it's nice to see and hear your positive reaction to some of those charts. So it helps, just feeling so positive fundamentally. Things have been so positive that I just keep kind of pinching myself to the point where it's uncomfortable to be that bullish. Yeah. And so I'm grateful for days like today, where we're seeing, another 5 to 10% hit, along with the precious metal stocks that are getting hit today too. It's kind of a bloody day out there, but it's kind of nice to see that. It just feels like, oh, this is kind of like the old times.
Yeah, getting a beating. Look, if you're above an inclining 1 or 3 year moving average, go to sleep, guys. Like, we saw these big trends there. They don't switch overnight. Like the 2015 or 16 rally there in precious metals commodities, I call that the wake up call, where everybody got, after a long decline, there's always a wake up jolt, like that tries to break that trend, but it rarely succeeds unless it's a V-shaped recovery that you see in the stock market. But that's just a wake up call. Now, this is not the wake up call. This is the real thing. You broke above, and the only thing that's going to happen now is retests higher lows for the next 10 years there. And people got burnt by the 2015-16, but for me, that's until we make lower lows, you hold on to all these commodities. Anything that you could hold, except radioactive uranium, it's great.
Nice. Yeah, that's great. Yeah, it's definitely looking good on the technical side too. Yeah.
Do you want to tell us again, like where folks could the best place to get your content, reach out to you?
Sure. Yeah. I'm pretty active on Twitter at Uranium Insider. You can go to Uranium Insider, contact me there, or through Twitter if anybody's interested and has questions about our service. And in our newsletter, we do an in-depth monthly newsletter that goes out every month. We focus a lot on the macro, so we really dig into all of the macro news from the previous month. And analyze that, especially what it means, what's actionable about that news. And then we obviously have our stock picks that we recommend to our members as well, and any of the company news for those stocks on our focus list. And then we send out bulletins intra-month as well, as needed. So if there's pressing news that's for the sector or for one of the companies that we hold, that we'll actually send that out, an intra-month, just as the news comes out via an email bulletin. And we've been going for 2 years strong. We've got a good small dedicated team behind me, which is great. And things are looking really good for the site. We've done really well so far.
Love it.
Yeah.
I'm happy to hear that, and I'm pretty sure we're all going to have a great nice 5 to 6 years, guaranteed by money printers and whatnot. It's not true, guys. We don't know the future, but I think we're on a good track. All right, Justin, maybe we'll talk again soon.
I'd like that. Yeah, anytime.
Fun.
Yeah.
All right. Ciao, guys.
Patrick.
Bye.